Good morning, traders. It is Tuesday, the 12th of July, 2016. It's 8:01 a.m. Chicago time. Thanks for joining. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news seems to be more of a continuation of yesterday's higher auction than anything. The S&P 500 yesterday, the S&P cash, the SPX has made a new all-time high at 2137.16, higher than the 2134.72 achieved prior. The pound is rallying on Theresa May taking over as the next Prime Minister of Britain and head of the Conservative Party. This ends David Cameron's time in the position, which was held since 2010. The British pound is stronger and is up at 131. Let's see, GBP. That's around 131.69. The Chinese government got some bad news yesterday. The Hague ruled in favor of the Philippines' claim that China's nine-dash line, a boundary for its ownership claim to 85% of the South China Sea, has no legal merit. And other than that, Tesla is being investigated by the SEC for hiding an autopilot accident, allegedly, before it made a $2 billion stock offering in May. And Alcoa reported yesterday. Alcoa fires off our earnings cycle for this quarter. The aluminum giant earned 15 cents per share, topping the 9 cents expected. Revenue fell 10.2% to 5.3 billion. So look out for those earnings. They're likely to drive some of what we do here, although the market's more responsive to central bank or fundamental data. As far as the calendar today, we're clear until 9 Central, 10 Eastern. We get wholesale inventories for May expecting 0.2%. Wholesale trade sales expecting 0.5% at the same time. And then we get the JOLTS job openings number expecting 5.5 or 5,500. And we have a slew of speakers. Last night we had Fed's Mester speaker, BOE speaker Carney came out and spoke at 4 a.m. Central, 5 a.m. Eastern. And then at 8:15 here in about 10 minutes, we get Fed speaker Tarullo, followed by Fed speaker Bullard, 5 minutes after the cash open at 8:35 Central, 9:35 Eastern. And then we get ECB speaker Lind at 12:30 Central, 1:30 Eastern, and then Fed speaker Kashkari at 4:30 Central, 5:30 Eastern. So a lot of Fed speakers on deck. As far as the market sentiment, the funds money is moving to risk. We see that crude oil is up 3%. At $46.13, up $1.36. Big move in crude there. Followed by the Euro stocks, the DAX, the British pound, the mini Russell, NASDAQ, S&P Dow. And then the money is moving out of the U.S. Treasuries, the U.S. dollar index, the Eurobond, gold, and the yen. So funds are, cash or capital is moving out of safety assets into risk, back into risk. The market, the S&P is trading 2141 and a quarter with the 2141.75 high after making new highs yesterday and dropping off. So very interesting look ahead. Let's have a look at what was expected yesterday and how things went. Here we go. So this is the primary hypothesis yesterday. This is what ended up working out, except that we actually pushed higher. Well, let me use a different color. We ended up pushing higher before dropping, instead of doing an open auction dropping, testing the prior range, and then popping up. We ended up pushing higher, dropping one tick one tick into the prior day's range. Um, and then we found our buyers and then pushed into the 2135 before selling off in the afternoon. That's what the market did yesterday versus this hypothesis. So partially correct. However, the figures that we were looking for got hit yesterday. Hypo 2 shows a non. There's it's debatable whether Hypo 1 or Hypo 2 held yesterday, but Hypo 2 had a expected an open auction, a push with a gap remaining to find buyers, and then to push through to 2135. It was somewhat of what we did, but not entirely. So it's overall both hypotheses were looking for the market test all the way up to 2135 or so, and it did so. Here's what we got yesterday. A push up on the open, a rotation down, one tick into the prior day's range. One tick failed auction. This is a perfect example of a one tick failed auction, and then the market rotated up and through to new highs. A high of 2136.75 was made before the market fell off and fell back into the range. A normal variation day. We broke the IB on the upside. A pretty nice taper on the high and the low end of the profile with a double distribution and an LVN right underneath the IB. So 2132.25 was the cutoff point with two distributions making their way into new all-time highs. So overall, the market is liking these prices up here. Overnight, the continuation of yesterday's auction resulted in it opening up, pushing a little bit lower, and then basically trading sideways through the Asian session, and then as soon as the European session kicked in, a push higher. And look at what it's done so far. A zipper, complete consolidation on the high end of the profile. There's a lot of volume up there. The expectation is this 2141.75 is not likely to hold, and the initial support is in this 2133, 2134, 2135 zone. This is the zone that we're expecting support in this morning. This is the area to watch out for. For me, this is the area that's going to likely be worth a stab long on an initial test if we get down there. I do not expect it to fall right through, but anything can happen in the markets. That's not a trade recommendation. So that's how things are shaping up right now. As far as we are in new high territory. You can see this profile here, this black profile, the composite is completely flat. This is new all-time highs, so there's nothing ahead of us except for these measured moves, and we have one here at 2140. There's nothing to go off of here. So this is not my cup of tea. This is not my game. This is not my strong suit here. So my approach is going to be the classic wait for failure, or wait for the market to show which rotations are dominating the move, and then look for a pullback to go in the direction of that rotation. So in other words, if we get, for example, if we push higher and then get a large rotation down and have a pullback, then I'm going to look to trade with this large rotation down, look for a pullback for a continuation trade. That's basically the entire trading plan for what I'm looking to do, because I don't have any profiles to go off of. There are no template days. If we go back in time up here, there's nothing to compare this current auction against, so there's little for me to go off of. Okay, so let's look at the expected hypotheses here. Interesting, this is telling me that my bit rate's a little low. Okay, so this morning with a profile overnight looking like this. This morning, the expectation is an open auction. I'm looking for a high to be taken out. So the problem with today's open is that the primary hypothesis and the secondary hypothesis are gonna be very similar. But overall, I'm looking for this P shape to open up, attempt to drop lower as much as 21.35, and then I'm looking for new highs to be taken out. That would be the primary hypothesis, and the reason that is the primary hypothesis is because it moves with the current trend. And so there are, and I'm going to tell you this as someone who's viewing how many, a large number of accounts trading this market in the futures. There are so many bears out there. There are so many people out there who are trying to pick this top and are just getting pushed out. So the moves are likely to continue higher, and the moves higher are likely to be to have a pretty decent push on them. But the primary hypothesis is a push higher to continue because there's nothing else that we can go off of. The secondary hypothesis, again, we have a P-shaped profile here. Secondary hypothesis, open auction, push higher early, find its sellers somewhere up here in the 21.45 range, and then start to move up to test 21.33, giving us about 12 points of range, which is about what all that we can expect, and that's the secondary hypothesis. So my key plan for this morning is to wait and see which side starts pushing or which side is pushing harder, and then look for failure to go in the opposite direction. I will not pick a top if you're swing trading short. If you're looking to pick a top here, my suggestion through a member of the S5 chat room yesterday, my suggestion is that if you're getting short, maybe try to improve your position by selling premium, by selling puts against that position, and looking for them to expire to continue to improve your average. But again, I'm not. That's not a trade recommendation, but I would not sell naked short up here. The market could go higher much longer than you think and with a lot more vigor. So we've seen many people make a quick buck on the sell-off and then end up giving it back and more and having to refund their account just because they hold this negative view on the market. Well, the market has spoken and is saying that it likes these higher prices. Yesterday's balance profile is proof of that, that these prices are being accepted. The rejection of the prior day's range is further proof of that, and we're likely to continue higher as we go. So the primary hypothesis, again, is what I'm going to be watching out for. I'm looking for this to get responsive selling into the open as we balance inventory, and then for it to continue higher into the 21.45 range. Again, I want to remind you I'm not going to be here on Thursday. Tomorrow is the last Trader Bite I'll be doing. Stage 5 traders will get their last AMA tomorrow before I take off, and I'm back in the seat on July 25th, not June 25th, July 25th. So if you need anything from me, just drop me a note at futurestrader71.com /contact. Good luck today. Take care.